Welcome to Bears in Exile. Today is Thursday, April the 12th, and this is the market overview looking at the Dow, SPX, VIX, TNA, UUP, FXE, GLD, XLF, XOI, GE, I already said GE, and whatever else there is. Okay. Alright, being on the road just bakes the brain, all that sunlight and everything. Okay. Starting off with the Dow, I missed the majority of today's action, unfortunately, but still have the charts. And a nice, big, really big move up, destroying the midpoint of the big red bar, and even conquering its top, stopping right at the midpoint of the previous red candle, and giving us an uptick today. And the uptick resolves itself just above 13K. Very, very interesting. It'd be kind of funny going up, because 13K is such a important level. To break it, go just above it, peak above it, hit the bubble corrective move target, and then see what happens. But anyways, the bulls aren't exactly out of the woods yet. They certainly have lots of encouraging things. 14-day RSI moving average is still ticking down. Stochastics turning around, pointing up, CCI pointing up, RSI pointing up, histogram ticking around, and the MACD flattening out for a roll. Now if we back out a little ways just to see in better context some of these things, 14-day RSI moving average still has a lot of room to move to the downside. We could have the stochastics come up, tag it, and turn around. Then again, I mean, they could race all the way to the top, but going up for to catch up with the 14-day and turn around is semi-typical. You know, when it's on its way in a direction, the stochastics don't stay at the top or the bottom. Usually they come down, meet it, and then continue on their way over and over and over again. Could that happen here? Yes. Does that mean it's going to happen here? Maybe. Anyways, just something to ponder. Going to the 60-minute, just to take a peek. Wow. Pretty darn impressive. Getting really a full penetration and getting out the other side of the long-term moving average bar in the 60-minute time period. 14-day still ticking up. Stochastics already very high. CCI very high, backing away. RSI still pointing up, very, very high. Histogram starting to back off a little bit. MACD ticking up. So yes, a mixed bag. There's the potential for going up. There's the potential for going down. And you know, last night we were talking in the 60-minute time frame that there was the appearance of strength, that we could have a bounce, and the bounce not only caught on, but certainly, I would have think, squeezed some people today. So kind of okay that it was so big today, in my opinion. Maybe it's not over, and maybe it's getting close to being over. SPX, more of the same, busting out the midpoint of the big red candle, busting out the top end, and resting almost at the midpoint of the previous red candle. A lot of people are looking at 14K as being the important level, and certainly it is. And it's almost at the upper price consensus level. So very similar to the Dow. 14-day RSI moving average still pointing down, stochastics looping around, CCI pointing up, RSI pointing up, histogram turning around, MACD still pointing down, and 14-day RSI moving average, yes, it has lots of room to move to the downside, and hopefully it will. Going on to CompQ, the NASDAQ. This was the strongest for a long time, and even in the pullback, it was still the strongest. And it is bouncing off the long-term moving averages. That's why we, in part, in the past videos when we were talking about the different levels, that you know, saving grace potentially would be the long-term moving averages, and it would appear to be the case at the moment. But you know, getting down into it and doing damage to it that's a good start. Absolutely. And we got an uptick today in the NASDAQ. It was resolved intraday, and it did close above the major price consensus level. So this bubble is fixed. Now we have to see what happens next. Middle Bollinger Band above everything. Stochastics turning around, CCI up, RSI up, histogram up, MACD down, 14-day RSI moving average still down. Very similar to some of the others, except that its bubble corrective move is finished already. Moving on to the VIX. Ouch. Yeah, that's pretty darn bad. Losing the $20 level and going back down into the low 17s. We got a downtick today. Downtick was resolved intraday. This bubble is fixed. Long-term moving average is taking damage. Still above the upper price consensus level. Still above the major, of course. And still above the middle Bollinger Band. 14-day RSI moving average still ticking up. Stochastics down, CCI down, RSI down, histogram down, MACD down. And just to see how much room is left on that 14-day, yeah, it still has a good ways to go if it's going to do its march all the way to the top. Hopefully it will. But certainly, plenty of reasons why it could go lower. TNA. Not as strong today, still a more than decent move, giving us an uptick target. Uptick target is just shy of 59, not far from where it is now. 14-day RSI moving average leveling out. Not a good sign, not what the bears want. Stochastics turning up, CCI up, RSI up, histogram up, MACD still down, and it would be great to see that bubble corrective move finish, and then we can see what it wants to do. Hopefully all the bubble corrective targets will resolve themselves tomorrow. I'm hoping, but we won't know until they actually happen. Certainly we still have this technical damage which has been done, so I would imagine that the lows will have to be retested at some point soon. And but it's a waiting game until we get indication of turning around to do that. And moving on to XLF. The financials. Yep, they got their uptick today. They didn't have it yesterday. And they resolved intraday, closing above the lower price consensus level. 14-day still ticking down. Stochastics up, CCI up, RSI up, MACD histogram up, MACD down. And we can still see that in the daily time frame, financials still have a long ways to go on the 14-day RSI moving average. This is resetting all of the secondaries. So that's fine. That's absolutely fine. The only thing the bears do not want to see is the previous highs taken out. As long as we can establish a lower high, the bears are in good shape still. So waiting and watching. Apple. Unbelievable. 3 red days in a row. Is it really possible? We had the down tick target from a few days ago, giving us a target which still has not been met, and we're running out of time. Hitting the upper price consensus level and backing away slightly. 14 days still taking down, stochastics down, CCI down, RSI sideways, MACD down, MACD histogram down. Still not a big enough move to really shake the markets, and certainly the potential still exists, but we're just not there yet. And GE, try to get a better read on the Dow. GE getting that uptick target today, and it is about 1945, only 15 cents away, and this bubble will be repaired. 14-day RSI moving average still ticking down, stochastics trying to turn around and go up, CCI up, RSI up, histogram up, MACD down, and pulling back. Yeah, the 14-day RSI moving average still has room to move to the downside, plenty of it. And another thing about this whole move is letting the Bollinger Bands reset some. I do like that. And notice the top is also ticking down slightly, which is kind of interesting. So anyways, going on to UUP. Yep, ugly red day. Yesterday we were not really on board with it being green and the market being as green as it was. But with today's move, absolutely makes sense, and totally cool with that. 14-day RSI moving average ticking down, stochastics down, CCI down, RSI down, histogram down, MACD down, looking for a bearish cross. This is the bull's best ace in the hole at the moment, because certainly this looks like a lower high. Well, it is not just looking like a lower high, it is a lower high. And so high, lower high, lower high. This is the best thing the bulls have going at the moment. To turn this around, it would need to create a higher low and then go back up once again to attempt to break this cycle. And the potential exists. We have the 200-day moving average here. If that were to break, yes, that is great for the bulls, and we are not too far away from it. So very interesting test coming right up. FXE, the euro. Yeah, decent move. Got it. It's a very slight uptick yesterday, making it very official today. And regardless of which day you take it, it was resolved today. This bubble is fixed. Now hopefully we won't be going back in for that potential nightmare of a double flatline, which we've talked about in the past. And yes, the potential exists once again. So this whole little sine wave that I was kind of hoping was broken is still in play. And you can see here this this head and shoulders possible formation where you have a shoulder, head, right shoulder, and this right shoulder is in the proper place. It is higher than the left shoulder. This is really great. And we have a very clearly defined neckline to eliminate. So on the next turn down, as long as we don't exceed this top, if we can break this neckline, oh my, great, great, great for the bears. It doesn't mean that it's going to happen tomorrow, but certainly it means that there is light at the end of the tunnel potentially. 14-day RSI moving average ticking up, stochastics up, CCI up, RSI up, MACD histogram up, MACD up, looking for a bullish cross, still a little ways to go. But yes, there is something potentially extremely encouraging in the not too distant future. And GLD. Dollar going down, fear going down, but the dollar trumped today. Getting above the major price consensus level. We were encouraged by its movements over the last few days, but it was very early. And I personally don't believe that gold should be too cheap, and we have this 200-day moving average still above us. We're not far away from breaking this previous high, which undoubtedly will be a retest of the 200-day moving average simultaneously. Be very interesting to see what happens at that point, since it has tried twice to go and challenge it and has essentially failed both times, even though it got through it once. 14-day RSI moving average ticking up, stochastics up, CCI up, RSI up, histogram up, MACD up. Not bad. And SLV, nice move up, getting an uptick, resolving intraday. 14-day ticking up, CCI ticking up, RSI, CCI, histogram and MACD all ticking up. Not bad. And what's left? VXX, just for fun. Went up for a test of the long-term moving average bar, is falling away. Stochastics trying to roll over. 14-day RSI moving average still ticking up. CCI down, RSI down, histogram down, MACD up. The fight isn't over yet, but yes, it has done some bad things. Closing below the major price consensus level and not getting very much penetration here to do long-term damage. So that's unfortunate. And that's going to be it. I'm hoping that this rally will end this week, maybe even Monday. But watching, waiting for more information, and I'm sure lots of people are playing this to the upside, which is great. We tried to do that on the day before yesterday, but just didn't grab it. And here we are. What a unfortunate turn of events that was. But anyways, as always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.